Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. So we have talked about the probable performance of the gold in the beginning of the week just because of the holiday, and you can see that reaction on the gold market, I mean downside reaction, is a bit not as strong as on the euro currency. Despite that, you could see that market is moving, as actually in my example, this is a fixed choice, retail broker. In fact, the market is still closed. So, because it will open on the United States session when the Chicago Mercantile Exchange, or better to say, sorry, not the Chicago Mercantile Exchange, this COMEX exchange will start to work, and it's major reaction we should get. And I suppose that's, well, so as we were talking today in the Forex video, that market gradually start pricing in the rising probability of the rate change and by the Fed, and I think that the gold market will fall in the same direction. The second reason why the reaction on the debt agreement now stands muted across the board, actually on the stock market you will see no reaction at all, neither positive nor negative, just because agreement actually is not signed. So yes, they have talked something to each other, but it has not passed through the Congress, it has not passed through the Senate. Bill is not signed. Meantime, the Treasury has just the 38 billions on account. So, and how long it will last, coming to some compromise between the Republicans and the Democrats to sign this bill, it's a big question. So it could happen that even until the 5th of June, when Janet Yellen talked about the X date, bill could be not signed. It's also such probabilities. That's why market shows relatively tight reaction on these news. Meantime, what we have from the gold is still calling around the same support in the target. We suggest that in the shorter term we should see touching of the at least 1922 level. It has not happened. If you remember on a 4-hour time frame chart, we said, let's take a look, we have two grabbers. So discussed the background for possible downward action. We said why we not consider taking in a long position and be prepared for a touching of the XLP. And indeed, this was a reaction on an agreement. Market has dropped here, and really fast is returned back up. But don't pay too much attention to this. This is not yet the market itself. So XLP is not touched yet, and this sharp upward reversal doesn't mean that we're going higher. So it could show some upward continuation based on the engulfing pattern that we theoretically could get, and this so-called, as I actually call it, as a two candle bullish grabber that suggests some minor upward continuation. This could happen, but I wouldn't treat it as a major reversal because in general we don't have the background for reversal. In fact, for reversal we need to keep an eye on this stuff. So mostly I'm talking here on the same tool that I described in today's Forex video. When you do not have a lot of patterns, the market stands in a straightforward downside action showing very small retracement, very comfortable thing to use at the previous consolidations. On the gold market it's a bit greater, on its Forex market it's a bit smaller, but in logic mostly the same. So take a look, market right now is broken triangle down, it's now retesting its bottom. To start speaking about the reaction, market should totally erase this previous consolidation and move above it, forming some kind of the bullish reversal swing. Besides, if market will do this, the new trading range will be open to it, and if it will move back to approximately a 1960-1965 area, it tells you that it easily could keep going to the 1985. And in this case, maybe we could start speaking about any reversal, just because it might be left shoulder, head, to return it back up, it might be right shoulder to form, and that will be quite different story. In this case, indeed, we could start talking about the possible reversal or something. But this situation where this consolidation is still valid, well, this I wouldn't treat it yet as something really important. we have untouched XOP. In the current circumstances, I wouldn't consider taking the long position by far, at least until market will hit the XOP, and then, well, if you really would like to, you could maybe once XOP will be reached, you could consider some smaller hand shoulders. For instance, if it will be dropped to the 1922 area, that might become left shoulder head, and so on. So you could consider also some smaller pattern. But until XOP is valid, until market is still closed and we see bearish reaction on the euro currency that is already functioning, in the current circumstances, I would stay aside for a while from taking any long position and see what will happen after the gold market will open.